Welcome to the two-part retirement system webinar brought to you by the South African Revenue Service. My name is Pat Tuchedzo Chiuda, and I'm a SARS TV presenter. It is indeed a great privilege and an honor to be facilitating this webinar on the most talked about topic in the news and all social media platforms right now. But trust you me, you will find value in this session and you will gain clarity and insight into the taxation of your savings withdrawals. All right, I'm not alone. Please help me to welcome our sign language interpreter, Jonathan, alongside with Kamuhelo. Thank you so much for joining us. And also just to give you a background and the main aim of this session, we are celebrating 30 years of democracy, 30 years of freedom, and of course, the establishment of the two-part system. Now, through this system, you will have access to a portion of your retirement savings without you needing to cash out or to retire or resign entirely from a pension fund. Now, the main aim of this session is to provide education to you as taxpayers on the implementation of this retirement reform, its savings withdrawal benefit, and the tax implications when it comes to your retirement funds. Wherever in the world you are joining us from, thank you so much for joining us. But before we continue with the program of today, please take note of the following. So upon concluding this webinar, you will be directed to fill out a brief survey. We encourage you to participate in this survey to the fullest extent, as your feedback based on the information that will be shared throughout this webinar will be greatly valued and highly appreciated. For all those who have questions, you're more than welcome to post them on the Q&A chat bot, but please take note of the POPI Act regulations. Do not include your personal information when you ask all the questions that you have. Unfortunately, for those who are watching us or who joined us through YouTube, you won't be able to ask any questions. Only those who have registered for this webinar through the Zoom platform will be able to do so. Please engage with us on all socials using hashtag #YourTaxMatters. Now, because we understand that there are a lot of interruptions that might come while you're busy focusing on the webinar, if you experience any interruption, please do not panic, do not worry. The full recording of this whole webinar will be made available on our SARS YouTube channel, and the presentation will also be uploaded on the SARS website at the end of the webinar. So this is how our program will be structured. So it will be divided into two sessions. Now, the first session will be the presentation from our specialist, and then it will be followed by the Q&A session where you will be where the panel of experts will be responding to all the questions posted on the Q&A bot. All right. That was quite a mouthful, but very imperative for me to share that information with you. I'm quite sure you're understanding, you're asking yourself, when are we starting with the program? That's exactly what I'm about to do. Now, ladies and gentlemen, please help me to welcome our keynote speaker, Mr. Kingan, to kickstart the program of today. All right. Mr. Kingan, SARS head, leveraged legal products, is a senior executive who has risen through the ranks of the organization, having worked in enforcement and in the legal departments of SARS, among others. He joined the receiver of revenue in Pretoria 40 years ago and has occupied various roles within SARS operation, which includes legal interpretation, enforcement, business systems, and operational support. Mr. Kingan also served as an acting commissioner for about 18 months until the appointment of the current commissioner. He was very closely involved with a subcommittee of the Tax Commission responsible for the non-profit sector. This led to the current tax regime for public benefit organizations and the eventual establishment of the tax exemption unit within SARS that serves this sector. Mr. Kingan matriculated from Clapham High School, Pretoria, and that was the class of 1981. And he holds a Bachelor of Administration degree from the University of South Africa. Mr. Kingan, the floor is yours.
Thank you very much, Pats, and it's good to be with everybody here this afternoon or evening, as you said. I see much interest already in terms of the questions, and we look forward to a very good evening tonight as we try and engage on the matters before us. Firstly, obviously, we welcome you here as the South African Revenue Service. We really want tonight to be insightful and to assist you in the process of considering your withdrawal options of monies from what they call the savings pot. I thought I would go and do a little bit of research, and I asked a few questions of our artificial intelligence helpers that we've got around. And one of the comments, and I've got two specific, that came back to me was, save for retirement, start from your first paycheck. The second one that was stated was, it is never too early to encourage long-term savings. And yes, while those two statements may be true, we all know that challenges come across our path and life happens, and we have to deal with other financial challenges that come to us, and we need an outlet. Now, you may be aware this started around the COVID period, and if you go and have a look, there are various documents available with regards to the introduction of what we call the two-pot system. One of the statements, and I'm going to read it specifically from the initial, one of the press releases from National Treasury, was that there's a lack of preservation before retirement, which has been highlighted in various discussion papers. And then very importantly, individuals can access their pension funds and provident funds in full when changing or leaving a job. The experience that we had as the South African Revenue Service looking at the data is that many people took the resignation option to withdraw funds. And obviously, that has a very negative impact on the person's retirement in the future. Obviously, COVID came along and none of us expecting it, and it seems like a distant memory now, thankfully. But we sat with many people very negatively impacted by the pandemic that we had, that came across South Africa and obviously the whole world. And this obviously resulted in many people calling for access to their retirement funds. This led through various processes and engagements and legislation to a point where we are today, speaking about the two-pot system that goes live on the 1st of September. And that is what we're going to be speaking to tonight. And we really want tonight to come across, we've got various objectives as the South African Revenue Service. One of them which stands out to me, and that's why we're here tonight, is to give absolute certainty and clarity to you who are watching here tonight on the tax treatment and the related processes in the withdrawal. Now, very importantly in this process, the retirement funds and the way that you access that will be done through various administrators and processes. But in the process, SARS has to be approached for various reasons, which we will be discussing tonight. If there are any questions, and I think very importantly, if you have any questions, we want to encourage you to type them up. And beyond tonight, go and have a look at the various sources. We are publishing a number of guides and other material that we will have available to you. We even are having simplified processes with regards to checking on your tax number, checking on your debt, checking on other aspects that you might have with SARS. and we'll be communicating that tonight and in the week ahead as we move towards the 1st of September. Very importantly, your first port of call is not necessarily SARS. It would be the respective funds to whom you belong. And I think that is very important to note. We're trusting that tonight gives you the clarity, and we remain available to deal with the matters. In spite of the withdrawal, which we understand the financial stress that people are facing, we do want to, though, state tonight that we would encourage saving towards your retirement. It is important. And if you can in any way lessen the withdrawal, well, try to do that. But we know that many people are struggling and need to access these funds. With that, I'm going to hand over to Puta and to the rest of the presenters. Thank you very much.
Thank you so much, Mr. Kingan, for the wonderful welcome address. And of course, for emphasizing that the main aim of this session is to educate taxpayers for them to understand the whole algorithm when it comes to the tax implications of withdrawing from their retirement savings. Thank you so much once again, Mr. Kingan. Now, ladies and gentlemen, this educational session will shed light on the tax considerations of utilizing the two-pot system for your retirement planning. So it aims to clarify how your taxes may be affected. For those who are already asking questions, thank you so much for that. Please remember to post all the questions that you have on the chat, on the Q&A chat bot. If you just joined us now, please do not worry. The full recording will still be made available for you on our SARS YouTube channel. Keep on engaging with us on all socials using hashtag #YourTaxMatters. We are moving on with the program. And of course, next on our program will be Pat Ndawa, who will take us through the presentation. All right. All right. Pat Ndawa is a process engineer with a passion for excellence and innovation. She has a degree in business management from University of South Africa, a national certificate in business analysis from Faculty Training Institute, and a certificate in quality management systems from South African Bureau of Standards. She also holds a certificate from Nelson Mandela University, where she participated and completed the Lean Specialist Program. Pat joined SARS in 2006 as a quality management inspector for customs. Since then, she has advanced her career by becoming a process analyst in 2008 and a process engineer in 2012. She has worked on various portfolios, including customs modernization, Department of Home Affairs modernization, and SARS support services. Her current position is lead engineer for the Tax Directives project under personal income tax, where she applies her skills and knowledge to improve the efficiency and effectiveness of tax administration. Pat Ndawa, the floor is yours. Pat. Hi, Pat.
Sorry about that. Good afternoon, ladies and gentlemen.
Is your camera on?
Yes, it is.
Okay, yeah, there we go. I can see you can continue. Thank you.
Sorry about that. Good evening, ladies and gentlemen. So, two-pot has been a topical subject for a couple of months now. But you may be asking yourself, what does this mean for me and my tax? Hopefully, by the end of the session, your questions, some of them or most of them, will be answered. So, what do I need to know? First of all, you must be registered for tax. Secondly, you must have your tax affairs in order, meaning that all your tax returns must be up to date, and you must be aware if you have any debt that is due to SARS that you owe. Lastly, you would need to know what the possible tax would be on the amount that you want to withdraw from your savings. So, where would you register? Firstly, you might not know if you are registered for tax. So in this case, you can simply dial *134* 7277# on your cell phone. Your tax reference number will be sent to you if you are registered for tax. If you are not registered for tax, you can simply go to sars.gov.za. On the registration tab, you click, it will take you to our e-filing platform where you can register for tax. In the near future, you will be able to register for tax on our SARS online query system, on the SARS Mobi app, and on WhatsApp. So now that you are registered for tax, the next step you would need to know is whether your tax affairs are in order. And to do this, you can simply log on to e-filing. On the landing page, you select the statement of account icon. When you select this icon, screen A will be displayed. You click on statement of account. Statement B will display. You can choose your preference. You can either request a 6-month statement or your own defined date range. The statement of account will be displayed. In this, you will be able to see if you have any outstanding returns. If there are outstanding returns, you will be able to see for which periods these returns are outstanding for. It is important to have your tax returns up to date because if a tax directive is submitted to SARS for your savings withdrawal, it will be declined. Secondly, you can check if there is any debt that is due to SARS. This is also important to know because if you have any debt due, your savings withdrawal may be used to settle that debt. In future, you will be able to go to our SARS WhatsApp, SARS Mobi app, or the SARS online query system to determine your tax compliance or any debt owing or returns that are outstanding. So now that you know this information, you may be asking yourself, but I really want to know what this all means. How will the tax be calculated on my savings withdrawal? As you know, every year, the Minister of Finance announces the new income tax rates that will be used to determine how each individual will be taxed. In the examples below, it shows how different remuneration levels or income will differ and how your tax will grow. The more you earn, the more tax you will pay. Remember, tax is calculated at your personal income tax rate. Also important to know that your fund administrator will charge an administration fee. This administration fee is not charged by SARS and it is not collected by SARS. If there is any existing debt, this existing debt may be settled by your savings withdrawal if it is due and not paid. So, SARS has taken out the complexity of you having to calculate what the tax will be using these tax tables. we have created a tax calculator for you. To access this tax calculator, you can log on to e-filing. You can click on the calculator icon. This will lead you to this will display a screen where you will complete all the information that will be highlighted by a red asterisk. Once you have completed, you simply click calculate and the tax amount will be displayed for you. In future, we will have a two-part specific calculator because the current calculator that we have is for all lump sums, including the two-part withdrawal amount. In future, you will be able to select the two-part specific calculator on the SARS WhatsApp, the SARS mobile app, and the SARS online query system. In these platforms, you will be able to query the tax that will be levied. You will be able to see if you have any outstanding returns, and also you will be able to see if you have any debt due. All this information will help you to make an informative decision on whether you want to continue with the savings withdrawal or not. And it will equip you to know when to approach your fund to submit your tax directive for the withdrawal. You can visit SARS TV to watch our helpful tutorials if you need any more information. Please, we like hearing from you, so stay in touch on our online channels. Thank you.
Thank you so much, Ms. Ndawa. If I have to comment on that presentation, I would say it was very insightful, very informative, very mindful, and the way you presented, very demure. Thank you so much, Ms. Ndawa, once again for the informative presentation. And we always strive as an organization to ensure that compliance process becomes simpler for all taxpayers and traders. I hope everyone in our audience is now better equipped and understand all the tax implications associated with the two-part retirement system. All right, ladies and gentlemen, we have reached the final session of this webinar, and this will be the Q&A session that I will be facilitating, not alone, of course. I will be introducing a panel of experts who will be responding to all the questions that we have on hand. As I call out their names, you will be able to see their faces displaying on the screen. All right. The first person is Madi, who will be part of the panel for the Q&A. And the second one is Vaneshni. Thank you. And Pat. Now, these are my colleagues from South African Revenue Services. We are also joined by a special colleague from Financial Sector Conduct Authority. Thank you so much for joining us and, of course, giving your time to assist with this webinar. Warm welcome to you, Sunshine. There we go. All right, Madi, since you are the first person I called out, a taxpayer wants to understand how much will I be taxed on my withdrawal from savings and what is the marginal tax rate applicable?
Thank you, Patu, and good evening once again, colleagues on the line. So the tax applicable for the withdrawal savings is calculated using the annual income of the taxpayer plus the withdrawal that you intending to withdraw. So that means that we'll sum that amount, and that amount will determine the tax bracket that the taxpayer would be taxed at. So we use the marginal tax rate to determine what tax is applicable. That would range from 18% to 45%. It depends on your tax bracket. So that would be how we determine what will be the withholding tax from the fund. Thank you.
Thank you, Mari, for your response. Vaneshni, I will direct this one to you. So when it comes to the two-pot, how does it apply, or does it apply to all funds, including preservation, retirement, and provident fund?
Thank you, Program Director. Good evening. The two-pot retirement regime is applicable to members of pension funds, pension preservation funds, provident preservation funds, and retirement annuity funds, subject to certain exceptions, such as legacy retirement funds, which may be exempted if these funds comply with the conditions to be determined by the Financial Sector Conduct Authority, and unclaimed benefit funds. Unclaimed benefit funds are preservation funds that were established solely to house unclaimed benefits. Thank you.
Thank you for your response, Vaneshni. All right, Sanjay, I think this one is for you. And I'm quite sure that everyone, when they started hearing the word two-pot retirement system, they were asking themselves, how does the two-pot retirement work?
Thank you, Patu, and good afternoon to everyone. So, the two-pot that will be introduced from the 1st of September 2024 will introduce two new pots when it comes to retirement contributions. The first pot, which is the accessible pot, will be your savings pot. The second pot, which is your compulsory preservation pot, will be your retirement pot. However, in reality, if you've been contributing to a retirement fund all along, then you automatically have a third pot called a vested pot. Now, this pot is separate from the two-pot system because its benefits are ring-fenced. Now, let me give you a bit of detail when it comes to these pots. The vested pot, like I said, holds the value of the member's interest in the fund prior to 1 September 2024, together with fund return. Now, what does this mean? Everything that you've accumulated in your retirement fund until the 31st of August 2024 will sit in your vested pot. No new contributions may be made to this pot, save for arrear contributions. Now, the reason why this pot is separate from the two-pot system is because the current legislation will still apply to this pot. What does that mean? After the 1st of September 2024, you will still be able to access your vested pot if you resign or if you are retrenched. Now, the first pot of the two-pot system is the savings pot. What goes into this pot? From the 1st of September 2024, a third of all your contributions will go into the savings pot every month. This pot is only accessible once a tax year, subject to a minimum withdrawal of 2,000 Rand, meaning if you are withdrawing less than 2,000 Rand, you won't be able to do so. This pot is also subject to tax at your marginal tax rate as well as admin costs. What does this mean? If you withdraw an amount, that amount, tax will first be deducted from it at your marginal tax rate. After that, admin costs will be deducted. After that, if you owe SARS any monies, that will be deducted first, and the net of that is what you will receive. The last pot is the retirement pot. Now, from the 1st of September 2024, 2/3 of your contributions will go into this pot every month. You will not be able to access this pot until retirement, and you'll have to use it to purchase an annuity. Now, the last thing that I will touch on, I left it for last because I know that it causes a lot of confusion, and this is the seed capital. I thought maybe if I explained how this came about, it might be easier to understand. Now, come the 1st of September 2024, your savings pot and your retirement pot will be empty. Nothing will be in it. Now, unions were fighting for their members and saying, no, the reason why we're pushing for this, the reason why we've even pushed the date up is because we want that immediate access come the 1st of September. And we said, okay, what we have agreed on is 10% of your vested pot, capped at 30,000 Rand, will be transferred into your savings pot as an opening balance. That's all it is. It's an opening balance. It's once off. And after that, your third of contributions will go into that pot. So there'll be your seed capital plus a third of your contributions together with fund return, depending on how your fund performs. Thank you, Patu.
Thank you so much, Sanjay, for that response. Pat, I will direct this one for you. So, how much can one access from the savings pot in a lifetime? Your
The
mic is
simple answer, the simple answer, Patu, is that there is no maximum amount. The amount of money that you can withdraw really depends on what is in your savings pot. However, there is a prescribed minimum amount of 2,000.
All right, thank you so much. And also thank you, Dimakatso, for joining us. Warm welcome. All right, Madi, if a taxpayer is owing SARS and has already made payment arrangements, will SARS deduct that from their savings claim?
Thank you, Patu. Maybe let me start by providing context of what payment arrangement is. I'm not so sure if everybody understands what that means. So we've got a facility within the organization. If you do happen to be in debt with SARS, you can approach SARS and present your case with merits, of course, that why you can't pay the full amount. So what they do is they can determine the affordable amount on a monthly basis up to a certain period. It could be 6 months, 12 months, up to the period that they agree. So should there be any of those agreement with us at the time when you want to withdraw from your savings withdrawal benefits, so we would not take the money from your withdrawal to settle the debt. So we will still honor that arrangement that you've made with SARS, provided that you also honor your agreement with SARS, which means you don't default on the monthly arrangement with SARS, because should you default from that arrangement falls off, and therefore your full debt will be collectible by SARS, even in this case of where you withdraw from a benefit, savings benefit. The other arrangement that would be in place if you have not yet settled the agreement with SARS for deferment arrangement, you can apply for suspension of payment while you're busy dealing with trying to make a deal with SARS to defer your payment of the debt that is in place. So in that case as well, if there is any suspension of payment which have been allowed by SARS, we will also not collect the money that is owed to SARS at the point of withdrawal. Thank you, Patu.
All right, Madi, just a follow-up question on that. So what happens on the assessment after the withdrawal?
Okay, so maybe the assessment is the term when taxpayer come to provide us with all their annual income, and we determine if the taxpayer have paid their duly tax during the year in full, or they've paid more than what they are supposed to do. So that's what we call assessment. So at the time of assessment, what we'll do again, we'll look at your full year income that you've received. In this case, it might be your salary from your employer or any other income that you're receiving, for instance, rental, that because it's part of your income. If you've withdrawn within the reporting period, which means the financial, the tax year, which runs from March to February, that will be included as part of your income. Together, that makes your full income, and it will determine whether you need to be paying more, or we need to refund your money because then you've paid more than you're supposed to pay for that financial year. Thank you.
All right, thank you. Vaneshni, so a taxpayer wants to understand. So the taxpayer says, I've never withdrawn any money from any fund and I'm under the age of 55. Will I qualify to get the first 27,500 tax-free from the 30,000 rand?
It is important to distinguish between the existing withdrawal benefit and the savings withdrawal benefit that is payable from 1 September 2024. So the first 27,500 of a withdrawal benefit, it will be tax-free if a taxpayer has not received previous lump sum benefits from a retirement fund, and if the taxpayer resigns or withdraws from a retirement fund prior to retirement. However, in terms of the two-pot retirement system, the withdrawal benefit is payable as a lump sum benefit from the vested component only. However, it will still be subject to tax in accordance with the tax rate table applicable to withdrawal benefits, which includes the 27,500 tax-free amount. The savings withdrawal benefit, on the other hand, as previously mentioned, it is not a withdrawal benefit and it will be taxed in terms of a taxpayer's marginal tax rate. Thank you.
Thank you, Vaneshni. Back to you, Sanchai. So does the savings pot withdrawal accumulate if a taxpayer has not withdrawn their 30,000 this year and they decide to withdraw, let's say 60,000 next year, provided that they have saved enough money?
Thank you, Patu. So the short answer is yes, it will accumulate. What I want to emphasize is a member does not have to withdraw from the savings pot if the member does not need to withdraw from it. The benefit in this pot will accumulate and it will roll over to the next year. Now, I want to give a practical example, okay? Let's say a member contributes 600 Rand a month towards the retirement fund. A third of that is 200 Rand, which will go into the savings pot every month. So come the 1st of September, what will happen? It's the 10% kept at 30,000 Rand opening balance that goes into your savings pot. Ne? That is there. Let's say you do not withdraw it, okay? So 30,000 Rand opening balance and then 200 Rand that you keep contributing there every month, which is a third of your 600 Rand, right? So by this time next year, you will have 30,000 Rand plus 2,400 Rand, which is 32,400 Rand, and you'll be able to withdraw all of it. You will be able to withdraw everything in your savings pot once a tax year. Let's say you take the 30,000 Rand the 1st of September. So now your opening balance is gone. After that, you will be contributing a third of your contributions, which is 200 Rand, 200 Rand, 200 Rand every month. This time next year, you will have 2,400 Rand. That is above the minimum of the 2,000 Rand, and you will be able to withdraw that as well. Remember also, you can also decide to only withdraw the savings pot when you retire. You can withdraw the savings pot in its entirety if you leave it until retirement as well. Now, what is the benefit of not withdrawing from it now as opposed to withdrawing from it when you retire? The first benefit is long-term planning. Remember, only 6% of South Africans retire comfortably. So if you leave your savings spot until you retire, you'll be in a better position come retirement and you can still take the entire pot in cash. The second benefit is that there's a preferential tax because if you withdraw from your savings spot before retirement, it will be taxed at your marginal tax rate, and that could be pretty high. It could even push you in a different tax bracket. Whereas if you leave the savings pot until retirement, it has accumulated, together with fund return, and you only withdraw it when you retire. Remember that that first 550,000 Rand is tax-free. It's 0% tax, but only if you've never withdrawn from a retirement fund before. Just be cognizant of that. So yeah, and that's all from me. Thanks, Patu.
All right, Sanjay, just another follow-up question on that. So what happens if a member resigns or retire after the 1st of September 2024? Does that mean they're still going to get their money?
Okay, so resign and retire, two separate treatments. So let's deal with if a member resigns or is retrenched after the 1st of September 2024, but before retirement, what will you be able to access? You'll be able to access your vested pot in full. You'll be able to access your savings pot in full. What you will not be able to access is your retirement pot, as that must be preserved until retirement to purchase an annuity. Now, you ask what happens if a member retires after the 1st of September 2024. What happens then is, from your vested pot, you can take a third in cash, 2/3 must be annuitized. From your savings pot, you can take the entire thing in cash. From your retirement pot, the entire pot must be used to purchase an annuity. So that is the difference. Thank you, Patu.
Thank you so much, Sanjay, for your prompt response. Vaneshni, so a taxpayer wants to know now, what happens if they divorce after the 1st of September 2024?
So in terms of the two-pot retirement regime, the non-member spouse can access all of the components still as one lump sum benefit. However, what the fund will do, it would reduce the value in each component proportionally in order to give effect to the divorce order. Thank you, Patu.
All right, and just a follow-up question, and I think this is our last question that we can take. What happens now if someone is 50 years old, 50 years and older, 55 years and older, pardon me?
So with regards to members who are 55 years, as at 1 March 2021, members of Provident funds and who have remained members of the same Provident fund, these members can continue to contribute to the vested component. Alternatively, these members can choose to be part of the two-pot retirement system, and they can contribute to the savings component and to the retirement component. Thank you, Patu.
All right, thank you so much, Madi, Vaneshni, Pat, and Sanjay. Thank you so much for your prompt responses. Ladies and gentlemen, we have reached the final part of our Q&A session. And once again, thank you so much, colleagues, for your prompt responses to the questions. If your question has not yet been answered, please be on the lookout for the response under frequently asked questions on the SARS website. All right, ladies and gentlemen, we have come to the end of our webinar, and I would like to thank you all for your time and participation. But please do not exit the webinar as yet, as I will be heading over to Madi to close the webinar by sharing some very important information regarding this webinar. But from my side, I believe and hope that this webinar has met all your expectations. Also, before we close, I would like to thank all the speakers, the sign language interpreters, the panelists, organizers, and the IT team for your contribution towards the success of a webinar. Please don't forget to follow us on our social media platforms. You can subscribe on YouTube, follow us on Twitter, X, formerly known as Twitter, Facebook, and you can also find us on LinkedIn. And remember, as soon as you leave this webinar, you will be directed to the survey. Remember to complete it because your participation will be highly appreciated. From myself, Patichedzo Wachi Oda, have yourself a wonderful evening. Thank you and goodbye. Over to you, Madi.
All right, let me thank you all for affording us time to share this informational session with us regarding the two-pot, especially around the tax implication. I hope you did find our information very interesting and enjoyable. Some of the key aspects from the presentation that I would just like to re-emphasize for you to take home with. I'm sure you would have picked up that we, as all employees or anybody who's a participant to the fund, it doesn't matter which type of the fund, we all are entitled to the savings withdrawal benefit, which means we actually don't have any choice. They will create this two-pot for us automatically in the back end. It does not necessarily mean because that is available, we should, on the 1st of September, rush to go withdraw the money. It is meant for emergency or when it's really, really needed. So I would really encourage you that you take that opportunity only when you need the money, not just because the money is available. It's not for buying shoes, but it's all your money. You can do all you want if you want to wish to do so. However, the one thing that don't forget to do, for you to qualify for a withdrawal, you need to have a tax reference number. Some of our colleagues online might not be registered on our register, which means then they don't have a tax reference number. It is it's a mandatory field on the application form. Your fund will tell you that we will not be able to help you without the tax reference number. Therefore, please use all those functions or from some of the tools that we have to register for your tax. And the other thing that you must just be aware of is the tax implication, which is associated with the withdrawal, which is we do tax at the marginal tax because this withdrawal is being deemed as an income. It's not being treated the same way as your lump sum. As you would have heard one of the presenter that if you were to retire and you want to take some of your retirement fund, your first 550 is zero tax. However, this withdrawal, it doesn't matter how much you withdraw, this will add on top of your current annual income and it will be taxed as such, which means it might take you from the current tax bracket to the next. So just be aware of those. The other thing that I just want to make you aware or re-emphasize again, which has already been said in the presentation, is if you have any debt with us, which means you owe us for any assessment amount, you owe us from admin penalties, SARS before or as part of the withholding tax that they will be giving to your fund, they will take that money also before you get the final net amount that you're getting from your savings. So it is in your best interest just to make sure that your tax affair is in order with SARS. And also the other thing is if you have outstanding return, which means you owe us a return, your application unfortunately will be declined. So what we did, I think in the presentation, you would have picked up that we provide tools, the online tools where you can go and check your status with us in terms of compliance. You can check whether you owe us money before you actually do commit the withdrawal with your fund. So please make use of those tools to make sure that you at least do due diligence from your side. I don't think your fund will do this on your behalf. So it's only in your best interest to do so. I'm saying this because once you commit to say that I want to withdraw and they process the application with us, you would not be able to cancel the directive because you don't like the amount that you're getting back, or you find out that you owe in SARS money. Just also be aware that it is not a tool to make you fear to get your money. When I say that if you owe us, you need to go check. You can go check. And if you do feel like you can't afford it at the point in time, you can approach SARS. SARS can make arrangement with yourself. And if it's granted, we will still pay your money without taking the money. Colleagues, with that, I want to thank you once again and wish you all well. And good night and good evening. Thank you very much.